Yo, what's good, guys? How are we this evening? I thought I'd do this video because we are starting to see a lot of this behavior. Reversals. Now, this is something that everyone in trading is effectively trying to establish. Whatever commodity, asset, you name it, this is what people are looking for. They're looking for the point where price will change direction. Now, how is it possible for us to establish this? Well, alongside the hybrid system, there are a few things that we need to consider before we actually start releasing the triggers and start buying or selling at key points in the chart. Now, if you are new to the channel, my name is Tino. Welcome to the Trader's Reality. Let's have a conversation, guys. So, let's get with it. What's Bitcoin been doing? Because that's the only thing that we do as traders. We come to the chart depending on what our day's been like. Whether we are working or whether we've been just staring at charts all day, we are always going to ask ourselves, what is Bitcoin doing? What's Ethereum doing? What's XRP doing? What is cryptocurrency doing as a whole? We try and look at the previous points in the chart, which will try and help us understand behaviors of the market makers and their ways of trying to manipulate retail traders to committing funds in one point and then changing the direction. Isn't that what we're looking for? We're looking for the points where we see price perform in such a way where we're going to be thinking, okay, is this the point where they decide to change the direction? Now, you've got to remember, ladies and gentlemen, conventional trading wisdom is continuously being applied, which is why the market makers stick to repeatable patterns. The problem is we just don't know when. That's the thing with trading. It's easy for us to go back in hindsight and say, yeah, it reversed here, it reversed here, it reversed here. But we will never know exactly when. Now, the only thing that we have is the candlesticks. Forget every single indicator out there. We only have the candlesticks. And even then, with the moving averages themselves, they are somewhat laggard. Okay, and if we go down into smaller time frames, all right, there's a high chance that the moving averages might give us a false move. So we're always left in limbo. This is the hardest, easiest way to make money, ladies and gentlemen. You can't be naive into thinking you're going to step into this chart or whatever asset you decide to trade and think, okay, I'm going to wait for a crossover to happen and then happy days, I'm going to just drop my money on there and hope that I make some profit. If only it was that simple. You know? So how can we establish reversals? All right. Now, this video isn't going to show you how to pick reversal points. It's going to help you understand how they develop. That is what we need to try and work on. The development of reversals. So let's take it back to our infamous cyclical pattern that we are always making reference to wherever she is. Here it is. Now, guys, if you ain't sick of this pattern, okay, or if you're getting tired of seeing this pattern, then trading isn't for you, because this is your almanac. This is the one thing that you need to try and get into your mind and become very familiar with it. All right, let's bring it back to the lab. This is a W formation. This is a peak formation. This is where it all starts. Now, where does this start? On a normal day-to-day basis, ideally you want to see the pattern start at the beginning of the week. Then when it makes a move to the upside, it forms its level 1. Continues back up, level 2. Forms another M pattern, level 3. This is where we expect a reversal. Price drops, level 1, drops level 2, drops level 3, peak formation again. Now, if we were to undertake the days and times of these cyclical moves, we would assume that Sunday, Monday would be start of the week. Rise level 1, Monday. Rise level 2, Tuesday. Rise level 3, Wednesday. Day 4, level 1. Day 5, level 2. Start again. Beginning of the week, Monday. This pattern here, ladies and gentlemen, or this cyclical pattern, is on the principle of Forex, where the market starts from Sunday all the way through to Friday. Now, cryptocurrency is a little bit different. It's continuous. And we have seen that Thursday tends to be a day of reversals. We normally see Wednesday as the reversal because it's the midpoint of the week. Well, in light of cryptocurrency, because there's an extra day added, and that would be the Saturday, that would mean Thursday would be the reversal point or the midweek reversal point. Okay? Now, we have had this cyclical behavior. Look at what happened here. We had the M formation, price dropped, and then we saw this W formation where Bitcoin went on to make massive gains to the upside. Okay? We ended up into this zone. We then had this final peak up, and then they brought price back down, and then we had one more attempt by the market makers to move price higher, and now it's pulled straight back. Now, in light of the cycles themselves, what's important to understand is this. If you're trying to establish a reversal point, you must make the cycle your priority, okay? Because you don't want to get caught up in a cycle or reversal, should I say. Okay, for example, if you wanted to try and catch this point as the reversal, even though we know we are in a level 3 formation, one of the hardest levels to establish a cycle or clear direction of the trend, okay? If you're catching longs in this area here, then if you're staying long and your liquidation point is all the way down here at 43, you're going to give back the money that you've earned. And that's not to say that price is going to continue to rise from this point. Who knows? But what I'm saying to you is when you're caught up in a level 3 or the final stages of a cyclical move to the upside, okay, you need to be aware that if you're trading in a level 3, you may get thrown about. And this is what we need to try and establish. We need to try and make sure that we improve the chances of price working in our favor by only aiming to trade from levels 1 to 2 and let level 3 play out by itself, because when level 3 plays out, it will then initiate a reversal to the downside and start a new pattern. All right? Now, what's funny is this. In light of the actual cycles themselves, okay, we are effectively working an M formation, right? So if we do go back to our infamous pattern right here, we understand that we are expecting a drop to the downside. Well, if we look at what price is doing right now, we can see that it looks like it's working its way down there. But what is happening? They're holding this zone. Now, if you look closely, you can see that they had recovered the previous vector candle. Look at that. They brought price back down into that zone. Notable volume at the lows. Now, why is this important at establishing reversals? Well, let's look at it like this. The market maker always tends to provide notable volume at key points in the chart. Look at this. Green vector candle, violet vector candle. Volume is at its highest point. Volume is starting to rise towards the downside. It's always when you see these sort of candlesticks where they like to turn price. Let's go back in the chart. Look at that. They turn price. Look at this. They didn't just turn price here. They stabilized it, one more spike and then dropped. Let's look at this. Key notable area, W formation. There you go, just for visual. W formation, up, rise level 1, up it goes. Yeah? Let's look over here. Key notable volume. 2 hits to the high, drop, level 1, drop, level 2, drop, level 3, peak formation. So you had a weak cycle there. Again, notable volume. Are you starting to see the pattern here, ladies and gentlemen? The key points in the chart always end up being the points where they decide to turn. Why is it that price always reverses when there's notable volume at that zone? Why? Because 95% of traders are applying the conventional practice of supply and demand at this point. They're thinking that at this point right here, this is where the buyers are in full control. So they're naturally going to be sending price higher. That's the wisdom that is brought to the marketplace. All right? And then what they say is when it starts to sell off, to justify their reason for being wrong, okay, and getting stopped out, it's because there's not enough buyers in this area. So imagine thousands and thousands of traders taking that idea and that concept into the chart and saying, oh, I entered long on this candlestick, but I got stopped out because it hit a supply zone. Please, bro. Come on. And you've heard me say it many a times. And the reason why I repeat it, because it's dismissed. Traders today are still approaching the marketplace with that sort of mentality. They are still thinking that when price is rising, buyers are in control. When price is dropping, it means sellers are in control. But the flip side paradigm to that is this. When price is rising, if a buyer is stepping in, who's allowing the person to buy? The seller. So by that token, the seller is in control. Likewise, when price is dropping, in order for you to sell, who has to be on the other end of the stick? The buyer. Yin and yang, equilibrium, whatever you want to conceive it to be, it is the fundamental law in this game. This is the business model. Market makers, what are they? Liquidity providers. And you can Google them. They are all liquidity providers. They are the ones with the cash. They are the ones who end up fixing your order against theirs. Remember, when you want to make your buy, okay, and when you want to close it in a profit, where do you think you're getting the money from? You're taking from the short that has been built against you. Because when you sell your long at a loss, what do you think the market maker's doing? He's buying it back. He buys your losing position. So he buys longs when you lose, and he covers his shorts. So he's making profit on both aspects. Do you understand how the game is working now? So how can we take this information and use it? How can we understand reversal points which are going to help us understand where price is likely to go? So the first thing that we need is cycles. Once we've established the cycle, we then come to the chart and look at what is price doing in and around key points in the chart. Look at this vector candle right here. Where do you think it spiked up above? It spiked up above the whole number, the 48,000 zone, and then it reversed. Why? Because there was a ton of orders up there that the market makers wanted to fill. They hit the obligation and made retail traders commit their money to the upside because everyone decides to go long and gets excited. Market maker then stalls, all right? Allows the retail trader at the open of this candle to realize a little bit of profit, keeps his money committed in the trade, and then the market maker then reverses price aggressively and takes out all the liquidations and the stops for the retail trader who went long. That is how the money exchange happens in this game. Now, there are a number of other factors that contribute to the reversal points in a chart. Look at the moving averages. Drop down smaller time frame and you'll be able to see how the breakdown of the 5 and the 13 EMA had started in this zone. Look at this. Notable volume in and around the highs. Okay? Price has deviated away from the 50 EMA on the 5-minute time frame. RSI is pretty high, but not outside the volatility band. So the move is actually weak. It's just when traders look at these candlesticks, they get a bit excited. Because why? They're looking left. They're thinking that this move is going to happen here because they've seen a similar, stronger candlestick. Look at that candlestick, man. That is a very strong candlestick. But in the grand scheme of things, it's not. All right? Drop down to the 15-minute time frame. What are you seeing? The 5, the 13, and the 50. Price is extended away from both. Quite far away. So we are expecting a reversion. We are expecting price to come back down at one point. So what factors do we need? What things are we looking for to identify a reversal point? So we've got the cycle. We know that we're at a level 3 and we are pending a reversal to the downside. Price is destabilizing in and around the 5 and the 13 EMA. You can see how it breaks down. And always wait for the retrace. Look what happens when it breaks down below the 5 and the 13 EMA. It tries to come back up. Induces the retail trader, brings price back up. Look at how they recover some of that vector candle. And then they snap price down to test the 50. Wait for the retrace. Price comes down to the 50 EMA, bounces away from it. Sets up the trap again. commits the retail trader. Why? Because the retail trader is buying the dip. How unfortunate for him. Retrace back up. That retrace is to induce. It's the trap. Right? It's the trap the market makers use. That's all they do in this game, guys. They just set traps. That's all they do. And human psychology always makes us fall for that trap. Why? Because we can become fearful at missing out at this big opportunity, but at the same time, we are greedy because we want more. What a crazy thing. Yeah? So when you're looking for reversal points, ladies and gentlemen, in light of the hybrid system itself, focus on the key candlesticks. Look at the mean. How far is price away from the moving averages? Once price comes down to the moving average, test the intention. Test that this move to the upside is and has got strength, because by principle you're looking for this. Rise up, retrace, continuation to the upside. So by that principle, you are expecting that this would be ideally your entry point or a safety entry, and this would be an advanced entry. But look what happened. Right? Price had come up, it came all the way down, trapped the retail traders to buy the dip, stopping volume right there. Price reversed back up, but it was weak. Look, this green vector candle didn't close strong. So they were setting up traps. They move price higher, they come back down, spike up one more time, commit the retail trader because he thinks that the 50 EMA has got support now. All right? Spike it up, bring it back down, and then they collapse it. Now, if you were going to wait for a safety trade, you would have had a criteria that said that you would have to enter once price got into this zone. Well, look how you saved your capital. Even if you were going to wait and enter on the advanced entry right here, you would have waited for at least a confirmation candle on the break for the advanced entry, because you would want ideally a vector candle to come in and around this zone. Okay? You would have been waiting for at least a vector candle to come through to the 48,000 mark. That's what you would really want to solidify a valid move to the upside. So considering what Bitcoin's doing right now, you can see, bright as day, notable volume appearing at the lows, failing to break down lower. Recovery of the green vector candle, one zone, and the second zone. Happy days. We haven't hit the 200 EMA yet. Let's have a look at what price does in and around the 200 EMA. Well, it didn't touch the 200 EMA here. Didn't even touch it here, but there was key volume right here. If you drop down to the 15-minute time frame, you'll see clear as day. Zoom out, and you'll see it for yourself. Where is it? Right there. This is what you're looking for. In terms of reversal points, ladies and gentlemen, in line with the hybrid system, you're looking for stopping volume candles and vector candles in and around the lows so that they can move away from the point in the chart. Why? Because they've committed enough retail traders to commit to the downside, i.e. get shorts filled, because the retail trader sells when price is dropping, okay? And he buys when price is rising. On the flip side, the market maker is buying while price is dropping and he sells it whilst it's rising, okay? When I say he sells it, he's going short as it's rising with anticipation to bring price back down again. If we look left, you can see clearly the green vector candle right there. They've completely recovered it right there. All right? Cycles, candlesticks, moving averages, intention. Intention is the one. Because you will always have to ask yourself, what is the market maker trying to make the retail trader think? And if you can understand what he's trying to make the retail trader think, you will be doing what the market maker is doing. And you'll be waiting for him to come out of the zone after he's committed enough traders trapped in the zone. This is no supply and demand madness. Forget it. There is no indecision in the marketplace. They know exactly where they're going. Looking at price right now and how it's been stuck in this 5K range, okay? People are saying there's no clear direction. Oh, there is a clear direction. It's just we don't know where it's going to go next, but the market makers do. Just because we can't see price going in any direction means that no one knows where Bitcoin's going to go next. Of course, you're going to get the guys that are going to say, yeah, it's going to go to 50K. Yes, it's going to go to 40K. Well, that's easy to say that, because once either one happens, you'll take glory on it actually happening, whatever it is you decide to call on. We are waiting right now. Market makers are building. They are building price. They are exploiting the retail traders' lack of discipline. Okay? It's these sort of ranges that you need to stay away from, because this is where you can get caught up. You think, oh, I missed out on a great short, or I missed out on a great short, missed out on a great long. Yeah, so what? How have you missed out on a great long or a great short when price hasn't even left the 5K range in Bitcoin? We got the 50K in sight, guys. It's very close. Do you understand that once Bitcoin breaks the 50K zone, we ain't too far from our all-time highs? And that is going to be a very interesting point in the chart. So, ladies and gentlemen, in order to understand reversals, one more time, determine the cycle. Once you know where you are in the cycle, you'll have an understanding of what the market maker is likely to do next. In order to establish the behavior of the candlesticks and try and determine if you are at a high or you're at the low for the day, pay attention to what the candlesticks are doing. Look at the moving averages. Have we seen momentum? Have we seen volatility come into the chart? Are we expecting a reversal back down to the 50 EMA or whatever EMA you are deciding to trade? How soon are the market makers likely to bring price back into that zone? Because we've also got the other aspect that they sometimes just don't bring it back into that zone. All right? Look at this. 1 hour time frame. Okay? When Bitcoin was making that move to the upside. Where was it? I believe it was... Sorry about all this artwork on my charts. Where was it? It was this right here. Look at this. Where's your retrace right there? Excuse me. For nearly what? 2 days, they did not touch the 50 EMA. That doesn't count as a touch of the 50, but that one does. All right? So how do you determine whether or not they're going to touch the 50? Drop down a time frame and look at the 50 EMA on the 15-minute time frame. All right? That's going to give you an understanding. The 50 EMA on the hourly is the 200 EMA on the 15-minute. So as long as price is staying away from that point, it's all systems go to the upside. All right? Now, I hope this video does bring a little bit of light for you in helping you understand how to effectively establish a reversal. Okay? If you want more information about this, guys, come and hit the streams. Okay? Go back and watch the streams. All right? The streams are there to help you understand and apply this hybrid system in real time. Because that's really the only way that we can learn. We understand there is a set criteria of information that we need to try and fulfill in real time. You know, there's no better way to learn than, you know, swimming with the sharks. That's what they say. You know, just don't get caught. All right? Guys, go and have yourselves a wonderful evening. Be sure to like and subscribe if you are new to the channel. And I'll be seeing you guys tomorrow. Mad love and respect to you all. Peace.